Good morning. I'm Menaka Doshi, and I'd like to welcome you to this momentous day for India's commodity markets. Starting today, India's security markets regulator, SEBI, will also regulate the commodity futures markets and all the intermediaries. So on behalf of SEBI, a very warm welcome to all of you. And in just a few seconds from now, we will be joined by the Honourable Finance Minister, Mr. Arun Jaitley, who is just walking in, I'm told. So bear with me. I'd also like to request all of you to switch off your mobile phones. It would be helpful if phones don't ring. And we're just almost at the beginning of this morning's event. And with that, a very warm welcome to the Honourable Finance Minister of India, Mr. Arun Jaitley, the DA Secretary, Mr. Shaktikanta Das, SEBI Chairman, Mr. UK Sinha, the FMC Chairman, Mr. Ramesh Abhishek, and all the Finance Ministry and SEBI officials today. Mr. Minister, please, if we can invite you to join us on stage and, in fact, begin this morning's proceedings with the lighting of the lamps, sir. On that auspicious note, I'd like to thank the Finance Minister for starting this morning and welcome him on behalf of all of us here. For that welcome address, I'd like to invite on stage SEBI whole-time member, Mr. Rajiv Kumar Agarwal. Mr. Agarwal will in fact be supervising the Commodity Regulatory Department at SEBI. Mr. Agarwal, can we have you on stage?
The Honourable Finance Minister of India, Chairman SEBI, Secretary DA, Chairman FMC, distinguished guests from the industry, and ladies and gentlemen. Today, on behalf of SEBI, I take this opportunity to welcome you all on this historic occasion when the two markets, that is commodities market and securities markets, which started their journey together about 140 years ago and traveled through the history on separate paths, are merging to allow Indian economy reap the benefits of economies of scale and scope. The merger of two regulators of the financial markets is a very rare phenomenon across the world. That is why this event is being looked at with a lot of interest even outside India. Friends, commodity derivative markets perform two very important economic functions of price discovery and price risk management. The futures price signals help farmers in taking their pre-sowing and post-harvest decisions and fine-tuning their marketing strategy. We all know that the credit needs of the farmers are high and access to credit is poor. It is why the farmers are forced to sell in the spot market immediately after the harvest, normally at depressed prices. A well-developed and well-regulated commodity derivative markets, along with a well-regulated commodity derivative market, along with a well-developed network of warehouses and negotiable warehouse receipt system, will facilitate flow of institutional finance to the agri markets, helping farmers in marketing their crop and so as to realize best price. The government, while entrusting the responsibility of regulation to SEBI, had the image of SEBI as an effective regulator of commodities market in mind. All of us know that SEBI has transformed the Indian securities markets in terms of infrastructure, processes, technology, and products in the last 27 years. The IMF and World Bank have acknowledged SEBI's efforts to emerge as a credible enforcement agency. SEBI is also on the board of ISCO and is a member of Financial Stability Board set up by G20. Friends, SEBI has ensured the merger process to be a non-disruptive one. Our teams in the last 6 months have worked hard in acquainting themselves with the commodity ecosystem and preparing themselves for the task ahead. SEBI will spare no efforts in developing a disciplined commodity market which will not only serve its desired purpose of price discovery and price risk management, but will also be able to generate international price benchmarks which may change positioning of the Indian stakeholders from price takers to price setters, which is so necessary as India is either one of the biggest producers or consumers in the world in a large number of commodities. Today, I take this opportunity to welcome the chief guest, the Honorable Finance Minister of India, on this momentous occasion when the commodities market will open under the SEBI regulations. I also welcome the Secretary DA, Shri Shaktikant Das, and Chairman FMC, Shri Ramesh Abhishek, and all the esteemed guests from the industry on this important occasion in the history of financial markets. Jai Hind.
Thank you, Mr. Agarwal. The morning has begun on the promise of more regulations. I'm going to now invite the FMC Chairman, Ramesh Abhishek. The former Markets Commission was founded in 1953. Its onerous responsibilities will now shift to SEBI. So I invite Mr. Abhishek to share his thoughts with us this morning, sir.
Honorable Finance Minister, Secretary, Department of Economic Affairs, Chairman SEBI, distinguished guests. It's a great honor for me to speak today on this historic occasion of merger of two regulators, which is being attempted for the first time in this country. Merger of FMC and SEBI has been done by the government to improve the regulation of this market. As we know, this market has grown significantly in last 12 years, but the regulation of this market under Forward Contract Regulation Act was of 1952 vintage. This meant that there were no futures trade at that time when that law was enacted. Options were not allowed, and entries of a lot of participants in the market were restricted. FMC also did not have the powers of a modern regulator, the power to enact regulations, power to regulate intermediaries, investigations, imposing monetary penalties, and many such powers which are required today. With this merger, now this mismatch between a very largely growing commodity derivative market and the regulatory structure has been addressed effectively by the government. This is also a very important financial sector reform by the government. This will bring a lot of discipline in the market and also a lot of development, because the commodity markets and derivative markets have a huge potential of growth in developed jurisdictions. Commodity derivative markets are typically many multiple times of securities market, and this potential now is going to be achieved under SEBI's strong and effective regulations. I may briefly recap that forward trading started in our country in the year 1875 in cotton contracts. This market grew rapidly between First and Second World Wars. During the Second World War, it was banned because of supply concerns. In 1952, we had FCRA enacted. Then market grew again till mid-1960s, and when again accepting two commodities, forward trading was stopped. However, in April 2003, the government allowed forward trading in all commodities based on a number of expert committee reports and the National Agricultural Policy of the year 2000. The main objective of this market, as also has been narrated by member Sri Agarwal, is price discovery and price risk management. The price discovered in the market is used widely by farmers, and a large number of agricultural commodities are traded here, which affect a large number of families, farmers, as is half the population in the country is affected by what happens in the commodity derivative market and the commodity markets. These help farmers in taking decisions on when to sow their crops, which crops to sow, whether to store or to sell their produce. These important decisions are taken by the farmers based on the prices discovered on this transparent platform. To disseminate prices which are discovered in this platform, the Commission has taken many efforts in this direction. Over 2,000 price sticker boards are installed in various mandis across the country. The Commission has also ensured dissemination of these prices through SMS. And we also have been conducting about 1,500 awareness programs, majority of them for farmers in every year, so that these farmers are able to be aware of this commodity future market and benefit from the price discovery which is thrown up. We have seen that this agriculture futures trade has had a good impact on the physical market in many ways. We know that most of the produce in the market comes out of the harvest, and prices crash and leads to a distressed sell by farmers. And during the lean season, the prices go up, affecting consumers very adversely. What we have seen in the commodities that are traded here, we have some statistics to show that mandi arrivals have actually gone down after the harvest during the peak season, and arrivals are not, they don't go down so much during the lean season. Thus, the supplies and prices have got moderated over the year. Just to give a small example, in 2010-11, 64% of mustard seeds arrived in mandis between April and June. And however, this came down to 34% in 2014-15. Thus, distress sell by farmers in the harvest season has come down sharply because of this future trade. Now, agriculture markets also have seen substantial deliveries. In the last financial year, we had delivery of more than 4,000 crore rupees worth of more than 1 million tons of deliveries, agricultural commodities. So this market has also been used by people to give and take deliveries over the years. In the last 4 years, we have tried to bring about a lot of reforms in this market, and the gap in the regulations of securities market and this market has been considerably bridged. To give a few examples briefly, we have changed the shareholding norms of exchanges, which are now more like stock exchanges. We also improved the corporate governance, board of directors and other rules. We also strengthened the risk management system by setting up settlement guarantee fund 2 years back. Similarly, we also strengthened the warehousing norms, which is a big concern for the market. And we have done a lot of investor protection and other measures, which have also bridged the gap between the regulation of the two markets. As the merger takes place today, it will be easier relatively to do the transition for market participants here, because the gap in regulations has been much less today than what was 4 years back. We also made sure that trading in this platform is very transparent. A lot of disclosures are made by exchanges regarding trades every day, and this empowers the market participants and brings transparency and ensures market integrity. Agri-marketing reforms need to empower producers with knowledge, information and capability to undertake market-driven production, provide multiple choices and competitive marketing channels to farmers, and attract large-scale investment for building post-harvest infrastructure. When producers get a better price for their produce and can avail of financing on easy terms, they would also invest in increasing productivity and better post-harvest management. I'll briefly give an example of how future trade helped farmers in Bihar in 2013. Purnia area of northeast Bihar has become the sole supplier of winter maize in our country. However, farmers used to get a raw deal from traders till a maize futures contract was launched in that area in 2013 with basis center in Gulabad, which is part of Purnia district. Its impact has been very electric in that area. The daily price discovered on this platform has become a reference price for farmers in selling their maize. A future price has incentivized substantial development of warehousing in that area by large companies. Availability and storage has also prompted starch and poultry feed industry to expand capacity in North Bihar. This is a powerful example of how difference can be made to the lives of ordinary people who are usually handicapped by information asymmetry and lack of access to markets. A well-developed and robust physical market is extremely important for proper functioning of the derivative market. Some of these requirements in physical market are setting up of a national market for agriculture produce through a common electronic platform, uniform goods and services tax to remove barriers in movement of commodities across states, warehousing development and promotion of warehouse receipt financing. The central government has already announced a scheme to support the efforts of state governments to set up a common electronic market for agri-produce. To improve the underlying markets, governments and public sector can also take the lead in buying and selling of commodities through transparent electronic platforms in the spot market. Online commodity markets reduce the high transaction costs faced by entities along the value chain. This ensures better price to both sellers and buyers. Many state governments are already using such platforms for procuring grains, sugar, pulses for PDS, and for other welfare programs like midday meal schemes. Similarly, e-auction mechanism is helping agencies like FCI to sell its wheat in huge quantities in a transparent manner. Large-scale adoption of these transparent mechanisms by central and state governments and their agencies would result in substantial savings apart from bringing transparency in the whole process. Such transparency in the spot markets would directly contribute to a much better functioning of the derivative markets as well. Indian economy is going to be one of the top 3 in the world in near future. We are a major producer or consumer of a number of commodities. However, prices of these commodities are discovered and set in commodity exchanges abroad, because those exchanges have very high level of liquidity and participation. In recent years, even China has strengthened its commodity exchanges, and they are now setting prices of a number of commodities. Our being price taker of these commodities is detrimental to the interest of our farmers, consumers, and other market participants. If our derivative market becomes strong and vibrant, even we would be able to set prices for the commodities in which we have a major role. To do so, we need to have more products and participants, which would be now possible after the merger. Of course, the entry of new products and participants has to be done in a careful and calibrated way, keeping in mind the likely immediate impact of these products and participants on the market. Clearly, the past had been challenging, but the future looks promising. Before I conclude, I want to highlight the tremendous efforts of the members and staff of FMC over the years in regulation and development of this market. Despite the limitations, I am sure that SEBI will take the commodity derivatives market to great heights and in the process help the country's economy and all the participants. Thank you.
Well, thank you very much, Mr. Ramesh Abhishek. We're hard-coded to 10 o'clock because that's when we'll request the Honorable Finance Minister to ring open the commodities markets. We have only 5 minutes to go, so I will take care of the very first and most important thing we need to do this morning in terms of the handing over, and that is the formal handing over of documents. So I now invite both the FMC Chairman and the SEBI Chairman to do that formal handing over ceremony of the undertaking, and this will mark the change in charge, so to speak. Okay, we're at that peculiar spot, if I may say so, because we have 4 minutes to go. I don't have enough time to, in fact, do the release of the book, and this is the precious book because it holds the regulations, that will govern the commodity markets here on, the commodity futures markets, that is, and all the intermediaries seated in the room, because I do want to make sure that we ring open the commodity markets on time. So I'm going to make one quick request. I'm going to ask if the SEBI Chairman can give us a sense of what's in the book, and we will release the book right after we ring the bell, so to speak, sir. But give us a sense of what regulations the market and its intermediaries should expect hereon.
Well, this book actually provides the entire framework of how SEBI is going to regulate this market. So we are starting with the changes in the FCRA, changes in the Forward Contract Regulation Act, and all the regulations. For example, how the commodity exchanges, which will now technically become a securities exchange, how they will be regulated, and what are the regulations for brokers or other intermediaries. So this will be virtually a handbook. Our effort has been over the last 7 months to provide a handbook so that all the participants have in one place all the requirements about how to run in this market, how to participate in this market. Our aim and effort has been that it should be helpful to all the participants, and in one place we provide all the instructions. That has been our effort.
So have you, in a sense, leveled the playing field between the intermediaries in the securities market and the intermediaries in the commodities market? So should brokers in the commodities market expect exactly similar regulations to apply to them?
Absolutely, absolutely. But in order to ensure that nothing is disruptive and there is no discontinuity, we are giving some time frame to them so that they can adjust to the requirements of the securities market regulator. So our whole effort will be that those who are in the business today, they continue to do the business, and we will give them some time frame so that they can adjust to the new requirements. So for some activities we have given them 1 year time, for some activities up to 3 years time. It has all been very well thought out after a lot of consultation and as approved by the SEBI board and as encapsulated in our regulations. So we will do that.
Also parity for exchanges, sir? Commodity exchanges or futures?
You want to take the wind away from future? I don't think I can announce that now. Yes.
All right. So we're 2 minutes away. I know that all the photographers here will want to get pictures of the Finance Minister before we in fact do the bell ringing. So I'm going to request the Honourable Finance Minister now if he could take a position near the bell, sir, so that we are ready in time to ring open the commodity markets on this momentous day. So I will also request you to pick up the hammer and allow me to ring the bell. Well, this is a momentous day for the commodity markets because it will now open under the watchful eye of a more strengthened and unified regulator, that is a SEBI, which has FMC merged into it. And we're now down to, I think, the last few seconds. Sir, 6, 5, 4, 3, 2, and 1. Thank you very much, Mr. Finance Minister. There you have it, the live commodity markets on the screens behind us. And now we're going to dim the lights because we do have a film that lays out or outlines the merger of these two regulators. So it's time to watch the audiovisual.
India has always been about teamwork, and to take the spirit of teamwork into modern importers and consumers in their price risk management. But commodity markets aren't new. To know the complete story, we need to go back in time. History. The first organized futures market in India was established in 1875 by Bombay Cotton Trade Association Limited for trading in cotton derivatives contracts. There used to be brisk trading in pre-independence era in cotton at Bombay, Ahmedabad and Indore, in wheat at Bombay, Hapur, Lyalpur, Amritsar, Okara and Calcutta, in groundnut at Madras and Bombay, in linseed at Bombay and Calcutta, in jute and hessian at Calcutta, in bullion at Bombay, Calcutta, Delhi and Amritsar, in sugar at Bombay, Calcutta, Kanpur and Muzaffarnagar. However, under the Defence of India Act, commodity trading came to be prohibited during the Second World War. But soon India was free. The government of India wanted to restart futures trading after the independence under a regulated environment. And thus was born the FMC, Forward Markets Commission. Forward Contracts Regulation Act 1952 was enacted, which provided the legal framework for organizing forward trading in the country and provided inter alia for recognition of exchanges. In 1953, Forward Markets Commission was set up to regulate the futures trading under Forward Contracts Regulation Act 1952. The futures market, however, remained dormant for the next 3 to 4 decades, and the trading could be permitted only in handful of commodities at various exchanges. With the liberalization of the economy in the early 90s, the process of liberalization of commodity markets also started. Though no major breakthrough could be made, the watershed moment came in the history of commodity futures markets with the National Agricultural Policy of the Government of India 2000. It recognized the positive role of forward and futures market in price discovery and price risk management. Thus, a considerable consensus was reached on the fact that derivatives markets play a valuable role in shaping decisions of the stakeholders of the agricultural markets. It was also felt that the signals emanating from futures markets will help farmers take decisions regarding sowing and marketing their produce. As a result of the agriculture policy statement, the 3 national multi-commodity exchanges came into existence. These exchanges were required to have demutualized structure, online trading platform, efficient clearing, settlement and guarantee system, a framework for delivery of underlying commodity, and real-time price dissemination system. While the trading was taking place only in 7 commodities in 1999, from the year 2003 onwards, the commodity markets had grown with all India reach, and trading was permitted in more than 100 commodities. These markets notched up phenomenal growth in terms of number of products on offer, participants, spatial distribution, and volume of trade. Traded value increased to 62 lakh crores in 2014-2015, with more than 5,000 brokers and 40 lakh investors. The decade saw FMC laying down an elaborate regulatory mechanism through rules and regulations on corporatization and demutualization, trading limits, KYC, etc., price dissemination, and spreading awareness about the markets. In spite of efforts of FMC to lay down an effective regulatory mechanism, it was being felt that the existing legal framework was not adequate to address the regulatory needs of the time. Realizing this deficiency in the legal framework, Honorable Finance Minister Shri Arun Jaitley, in the budget speech of 2015, announced the merger of the Forward Markets Commission with SEBI.
I propose to merge the Forward Markets Commission with SEBI to strengthen the regulation of the commodity forward market and reduce wild speculation.
Various committees, including FSLRC, had recommended for merger of FMC with SEBI to gain economies of scale and scope and make the regulation of commodities market more effective. While announcing the merger of FMC with SEBI, the government, at its back of mind, had the stature of SEBI as an effective regulator of securities markets. SEBI has transformed the Indian securities market in terms of infrastructure, processes, and products in the last 27 years. Initiatives such as dematerialization, T+2 settlement cycle, development of a vibrant derivatives market in equity, interest rates and currency, mutual fund trading, and laying a framework for participation of foreign institutional investors, e-IPOs, new platforms for SMEs and startups, etc., and new corporate governance norms have completely transformed the markets and have raised the profile of Indian markets as well as the regulator amongst the global peers. The IMF and World Bank assessment for India under FSAP has acknowledged that SEBI's efforts to build a robust market surveillance system emerge as a credible enforcement agency. SEBI is an active member of the Board of International Organization of Securities Commissions, ISCO. SEBI also has a seat on Financial Stability Board set up by G20. The World Bank report in 2014 has ranked India at 7th with respect to the protection of minority shareholders, commodities market under SEBI. Going forward, SEBI's vision is to ensure that in the coming years, commodities markets are amongst the best in terms of technology, new products, participants, risk management, regulations, supervision, surveillance, investor protection and enforcement, so that they are able to serve the desired purpose of providing an efficient platform for price discovery and hedging for all the stakeholders, including farmers. We are sure that the fruits of this historic merger will reach all the stakeholders.
Well, big thanks to Piyush Pandey of O&M for putting that film together and his entire team. Now, we saw this morning the commodity markets open under the watchful eye of a new regulator. SEBI's supervision of this market, its intermediaries and its stakeholders is going to need the support of new regulations. Mr. Sinha has already given us a sneak peek of what's going to be in this very, very important book. I'm now going to invite the Honourable Finance Minister to unveil this book, which in a sense represents the new regulatory architecture for the commodity markets. And we're just bringing the book onto stage, sir. I know I've been itching to get my hands on that book. I'm sure many of you are. Thank you very much, Mr. Finance Minister. And with that, the Department of Economic Affairs is in charge of policy measures for the regulation and development of the securities market and investor protection. This morning with us, DEA Secretary, Mr. Shaktikanta Das, and I'd like to now invite him to share his thoughts with us. Mr. Das.
Honorable Finance Minister, Chairman SEBI Sri UK Sinha, should I say former Chairman FMC, my colleague Ramesh, dignitaries in the audience, ladies and gentlemen, members and friends from the media. I am extremely happy to participate in this event, in what constitutes a landmark event in so far as the financial markets of the country are concerned. This event marks the fulfillment of one of the key budget announcements made by the Finance Minister in his budget speech of the current year. As has been mentioned earlier, it also marks a culmination of recommendations made by several committees in the past, starting with the Percy Mistry recommendations, followed by the Raghuram Rajan Committee's recommendations, and the latest being the FSLRC recommendations. This marks a culmination of several recommendations made in the past, and in that sense, it also is an important decision which has been taken by the government. The combined entity of what is now the combined entity of SEBI, which will regulate the commodities derivatives market as well as the stock markets, it will enable SEBI to capitalize on the synergies between the two sectors. There are lots of synergies with regard to margins, with regard to settlement, with regard to fair practices, fair regulatory norms, so far as the market participants, the intermediaries and the other stakeholders are concerned. Eventually, I think they will move towards a single platform for trading in all these derivatives. It was mentioned earlier that there will be more regulation. Well, sometimes more regulation need not necessarily be intrusive. It can be very benign, and I am sure with the good work that has been done by the Chairman FMC and his staff, and which is now being taken over by the Chairman SEBI and all the members and the officials of SEBI, I am sure they will be able to regulate it in a manner that also not only regulates and provides a fair playing field for all the participants, but also concentrates and provides for market development. There are several regulatory challenges which are unique to our commodities market. Commodities, agricultural commodities in particular, are very crucial to the real economy, to a country like India where any fluctuation in retail prices causes lot of not only ripples but also causes lot of outcry in various sections of the society in all over the country. The commodities market are subject to much higher levels of public scrutiny. Almost every citizen of the country is concerned about the retail prices of food grains, of agricultural prices. This is an area which also in a way has a kind of dual regulation, because while the derivative markets will be controlled by SEBI, the agricultural commodity markets are controlled by the state governments through various state level enactments. So this poses another challenge for the SEBI, and I'm sure SEBI will be able to deal with this and ensure a very smooth and seamless transition of what has been going on so far under the aegis of the FMC. The SEBI will be able to provide a smooth transition and a smooth takeover. It's very important for SEBI also to take steps to deepen the markets in a manner that provides price stability and also in a manner which ensures that eventually some benefit also, not some benefit, that the benefits also do reach the farmers. I'm sure this new organization, this new entity, the merged entity of SEBI and FMC under the umbrella of FMC, under the umbrella of the SEBI, will be able to discharge its work with lot of diligence, and I'm sure the business volumes under this for individual intermediaries, for individual stakeholders will grow and add to the overall economic buoyancy in this particular sector. This decision of the government again marks one of the important key administrative measures, a key reform measure which the government had announced and which the government has implemented. May I also take this opportunity to say that unleashing the process of reforms, taking various reform decisions, whether they are legislative or they are administrative or they are any other type of structural decisions, essentially which are in the nature of reforms which contribute to the process of economic growth, is a continuous process so far as the government is concerned. We do not necessarily wait for the budget as a single annual event where things would be decided and implemented. Reforms, so far as the government is concerned, as has been said earlier and as I had mentioned last week in some other forum, is a 24/7 exercise, and the government is committed to unleash a series of reforms in various sectors. In fact, if you see the last 14-15 months, the number of decisions which the government has taken, if one reads out the list is endless, and I can go on and on and on. But just to mention a few, take the case of GST which had reached a stalemate. The government was able to break the stalemate, and now the constitution amendment is ready for consideration in the parliament. The restructuring of the entire process of coal, spectrum and the FM channel auctions, that also has been put into motion and has been completed to a great extent. Liberalization in FDI policy also has been undertaken by the government. Several sectors have been opened up. The sectoral caps also have been increased in several sectors, and such measures will continue in the days to come. Before I conclude, because I do understand that all of you are assembled here to listen to the Honorable Finance Minister, but before I conclude, I'll just take 2 or 3 minutes to mention that so far as the economy is concerned, so far as the government and the Finance Ministry is concerned, the biggest challenge before us now is to ensure revival of demand in the domestic market in the context of the current uncertainties and the turmoil which the world is experiencing all around. As all of you know, China has shown signs of slowing down, but we must qualify by saying that China's slowdown is on a higher base. But nonetheless, there is a slowdown. The markets are in turmoil. The exchange rates are also under pressure. Eurozone, the crisis still seems to be continuing and perhaps will continue for some more time. USA is showing some signs of revival, but one does understand that the US Fed probably wants to be much more certain about the job numbers before they undertake any policy action on the interest rates. So given the kind of uncertainty and turmoil which is prevailing all over the world, today India represents perhaps the single brightest spot in the global scenario. This has been the perception of the government, and this perception was further reinforced by the IMF recently when they said that India is one of the few bright spots in the global scenario today. With this kind of uncertainties prevailing and with India representing a bright spot poses no situation, should not create a situation where we become complacent. The government will continue, the government has to continue, and the government will continue to take necessary reform measures and other policy measures to see that growth is revived, that the growth trajectory moves upwards of 7.5% in the current year and even higher levels in the years thereafter. The government also will be taking and has been taking number of steps to revive the demand. Now, demand revival obviously in today's context cannot be through the instrument of fiscal expansion which was undertaken in the post-Lehman Brothers crisis in 2008. We do not have that kind of policy space to undertake fiscal expansion of the type which was undertaken in 2008. It's not just a question of policy, it's not just a question of fiscal space, it's also a question of timing and desirability of such measures, because such measures also do produce negative outcomes in the medium to long term. So therefore, the demand revival in today's situation has to be necessarily investment driven. And we are committed to provide a scenario, a situation where investments do take place, where resources are available for making more investments, and where investments can be operationalized and actualized in the quickest possible time. So given this objective, the government has been focusing on improving the ease of doing business. Number of measures have been taken over the last 1 year. I don't want to go into the details of it, but it's a continuing exercise. Recently, it came to our notice that so far as foreign companies are concerned, when they come to India to start a business, if they have to open a branch office or if they have to open a project office, it does take time. We found that it takes sometimes several months to get a clearance to open a branch office or a project office. So we are now working on a scheme, we are now working on a system, and the government will be announcing the decisions very soon, whereby opening of the branch offices, opening of project offices by foreign companies which want to do business here in India, which want to start manufacturing in India, that gets simpler and it gets fast-tracked. Details will be spelled out very soon. It's been government's also intention to mobilize more resources to ensure that investments do take place. The National Investment and Infrastructure, the National NIIF, the National Investment and Infrastructure Fund also is getting created now. The gold bond scheme has been announced to monetize golds, to sort of channelize money which would have otherwise gone into gold assets, to channelize them into financial assets. The Finance Ministry has been working very closely with the Reserve Bank, and the Reserve Bank has come out with a paper on liberalization of the ECB norms so that more resources are available to domestic players. The FDI policy is another area where Finance Ministry and the Department of Industrial Policy and Promotion are working very closely to make the FDI policy simple and progressive. There are far too many conditionalities, and we need to review those conditionalities and come out with a policy which is simple, progressive, and which is business-like. We have also been working closely with the Reserve Bank of India. The Finance Minister has approved the overall approach that we should have for what we call rupee-denominated bonds which can be floated abroad. We have conveyed our views to RBI after a series of discussions with the RBI, and it is expected that the Reserve Bank would be announcing a scheme for a flotation of rupee-denominated bonds in overseas markets very shortly. The pace of reforms will continue. India today is the only bright spot, and we have to do everything that is possible to see that this process of economic growth, this process of India increasing the pace of its growth trajectory doesn't get stifled. The various measures the government has taken and will continue to take to ensure that the process of the momentum of growth and job creation is retained. I once again thank SEBI and the former chairman of FMC for having invited me to participate in this event, in a historic event today for our financial and commodity markets. I am sure the Securities and Exchange Board of India, the SEBI, would be able to provide greater depth and will be able to develop this segment, this sector of our economy in a manner that the benefit spreads to a wider cross-section of our society and of our economy. Thank you very much.
Thank you very much, Mr. Das, for the insight into the business environment, and especially for outlining several measures that I'm sure will banish any Monday morning blues that business has in this room. Now, if you've noticed in the last few minutes, Mr. Ramesh Abhishek, the chairman of FMC, has a big smile on his face, and that smile has gone missing from Mr. Sinha's face, because he now has 3 national commodity derivative exchanges, one of which is listed, and 3 regional commodity exchanges added to his portfolio of work. So SEBI's workload has virtually doubled. I'm going to invite Mr. Sinha, the chairman of SEBI and now the unified regulator, to address us this morning.
Honorable Finance Minister Mr. Arun Jaitley, Mr. Shaktikant Das, Secretary EA, my colleague Mr. Ramesh Abhishek, Honorable Justice B.N. Sri Krishna, Honorable Justice Sri Devdhar, Chairman of Presiding Officer of Securities and Appellate Tribunal, Justice Sodhi, former Presiding Officer of Securities and Appellate Tribunal, Deputy Governors of Reserve Bank of India, members of SEBI Board, captains of the industry, senior bankers, managing directors of exchanges and commodity exchanges, members of the media, invited ladies and gentlemen. Today is a momentous day in the regulatory architecture of this country. And I'm sure this is going to have an impact not only in the regulatory area, but also on the larger economy. We all know that the event for which we are sitting here today has a long history. And all events which are momentous have a long history, whether it is in India or outside India. I remember almost 12 years ago, Wajahat Habibullah Committee recommended about the merger of the FMC and SEBI way back in 2003. And then we had the Percy Mistry Committee report, Raghuram Rajan Committee report, and finally the report chaired by Justice Sri Krishna, the FSLRC, which had also recommended unambiguously about the need to have a merger of these entities. It is true that it has taken 12 years, but it is also true that globally as well, these developments take much longer time. We all know that passing a legislation is a very, very complex process. I remember that except for USA and Japan, almost all the major countries in the world have a unified regulator so far as the commodity market and the securities market are concerned. Whether it is United Kingdom, South Africa, Australia, Hong Kong, France, Germany, they have a similar system that we are adopting today. I remember that when Tim Geithner wrote his book about, the former US Treasury Secretary, he wrote his book called The Stress Test. He has recorded, and he has recorded very passionately, how he tried very hard to effect the merger of CFTC and SEC, and what factors, political and otherwise, prevented him from meeting this goal. And he has recorded that this lack of coordinated action, lack of one single entity dealing with the global financial crisis, perhaps led to a situation where there was delayed and uncoordinated action, and perhaps too little was done too late so far as the global financial crisis is concerned. We all know that Barney Frank introduced a bill in 2012 in the US Congress, but that bill also could not be passed. We also know that Volcker Alliance in 2015 has made a major recommendation about how there is a need to go for a merger, and they have highlighted that how agency friction, costly court battles, and confusion for the international partners is all affecting the regulatory system in the USA. But it goes to the credit of the Honorable Finance Minister Sri Arun Jaitley that he was able to navigate the whole process in the Indian Parliament and delivered this change in such a timely and effective manner. Frankly, I was not very sure whether we will have such a position taken so early and so fast, but it has all happened. And friends, we all must give credit to our Finance Minister, Mr. Arun Jaitley, for effecting that. With this merger, obviously there are several expectations from the market participants, from the experts, from the players. This merger is expected to bring in economy of scope and economy of scale. It will encourage more competition and better price convergence. It should help, our effort would be that it should help in simplicity in transaction and reduce the overhead costs. And more importantly, it should provide a tool for hedging by producers, by consumers, and by all the other stakeholders. We are grateful, we in SEBI are very grateful that government and the parliament have reposed their faith in SEBI as an institution. And we will try our best to live up to the expectations that has been, the expectations that are with us. I must also acknowledge that SEBI has made mistakes in the past. But we are also very careful to acknowledge that we have tried to learn from our mistakes. And I would like to inform all of you that so far as this commodity futures market is concerned, we will be very cautious so that we avoid making any mistakes, we avoid taking any missteps. And we will try for better convergence of the prices from the physical side. We do acknowledge that while FMC has done a lot about pooling of prices or about risk management, but there are areas where more needs to be done, and we will be focusing on that. The pooling of the prices has also given us a new dimension in the light of what has happened globally. For example, with regard to the scam which has taken place with regard to LIBOR prices or other forex prices. So we are going to be focusing on how we can improve the pooling of the prices, the way the prices are determined, and how the benchmark is fixed, and how it is more transparent. The measures already taken by SEBI are with us, by FMC are with us. But our effort would be to move in a cautious direction to ensure that we provide some comfort to the market and to all the participants that the way transactions are taking place or going to take place in the commodity futures market are at least as robust as they are in the securities market. While mentioning this, I am conscious of the expectations about progress in the development of the market. And the question was raised a short while ago whether exchanges will be allowed to do all the other works. I would like to mention that our immediate priority, the first priority will be to take stock of the situation and ensure that there is trust in the market about the way regulatory environment is going to evolve. And once we are sure that we have achieved this task, there will be series of measures for the development of the market. For example, there is no reason why we should not have more and more products, for example, options or index futures. There is no reason why we cannot have, for example, the commodity exchanges working also as security exchanges and security exchanges working as commodity exchanges. All those things will happen. I'm also very sure that going forward, those participants which are today not being allowed should be allowed to participate. For example, banks and foreign portfolio investors. However, I must hasten to add that while these are required, this will be done, but it will be taken over a period of time. These measures will take a little time. This is not going to be our immediate priority. Our immediate priority will be to ensure that the conduct of the market is in the best possible way, in the interest of all the stakeholders. I must say that our effort has been in the last 7 months to have a very detailed and effective consultations, and the booklet that you saw just now, which was released by the Finance Minister, is a culmination of our consultations. We will continue to be consulting the market and all the experts and participants, but our effort will be that we improve and further strengthen our human resources, our technology, so that we are able to live up to the task that has been given to us. I'm sure our step-by-step method, our nuanced method will be appreciated by the market, and they will show some patience rather than expecting something to happen tomorrow. It will not happen tomorrow. We will first like to take control of the situation, provide a stable regulatory regime, and then go towards development of the market. This is the way SEBI has functioned so far, and this is the way we will continue to function. I would like to put on record my deep sense of appreciation for the SEBI team, which was led by Mr. Agarwal, our whole-time member, the support given by Mr. Ramesh Abhishek and the entire FMC team, and the support given by the Ministry of Finance officials at various stages for coming to this date. In the end, I am reminded of a cartoon which was very famously shown again and again, and some of you might have seen it. When the Dodd-Frank Act was enacted, there was a cartoon showing some market participants, and we can all guess they may be merchant bankers, they may be lawyers, or they may be market participants. And they were talking, and I quote, "These new regulations will fundamentally change the way, we get around these regulations." So that was the regulations. So these new regulations will fundamentally change the way we get around them. I'm sure nobody is thinking on those lines in India. I'm sure SEBI will be very conscious and careful about how these regulations are put in place. And I assure you once again that we take this responsibility very seriously, and we will take all measures to develop the market. Thank you once again.
On that gently threatening note, thank you very much, SEBI Chairman. Mr. Sinha, if I may say so, I said this on my show last week when we were talking about this very merger. I said if onions make governments nervous, guar gum can get the best of regulators in a very sticky spot. So you have your work cut out for you. Thank you very much for speaking to us this morning. Now, as we've said through the course of the morning, the proposal to merge SEBI and FMC may not be a recent one, but the credit to make this merger possible undoubtedly goes to our Honourable Finance Minister, Mr. Arun Jaitley. May I please invite the chief guest of this morning to come and now address us.
The Secretary, Department of Economic Affairs, Mr. Shaktikant Das, the Chairman SEBI, Mr. U.K. Sinha, the outgoing Chairperson of the Forward Market Commission, Sri Ramesh Abhishek, ladies and gentlemen, today indeed has been a very hectic morning for all of us in India, because the day started with most of us watching television from what was happening at the West Coast in the United States. And then now we have two extremely important institutions which have stood the test of time, and one of them merging in the other. This also reflects how the size of the market has expanded and how sectoral challenges also have changed. And obviously, in a growing and evolving economy, people expect us to put our systems in place in order to be ready for these changes. Just to add on to what the Secretary of the Economic Affairs Department has said, these are extremely crucial and critical times for India. Crucial and critical because while we have a history of evolving, changing and improving, we also have a history of at times squandering away advantages. And this is exactly not the time where India can afford to do that. The world has started viewing us now differently. Heads of corporations, heads of governments, international public opinion now sees India as entirely a different place. And within the country itself, the more we unlock our potential and more we unshackle our energies and liberate our system from various controls, the more the aspirations are growing. And therefore, it is one thing for the international institutions to call us amongst the fastest growing economies in the world. But it is also equally true that India today has become more aspirational. And aspirational to the extent that it is no longer satisfied with a 6 to 8% band of growth. And therefore, even when the world has slowed down hugely, and we stand out in what is popularly now being referred to as a bright spot, still our level of satisfaction is not adequate. And therefore, we have to continue to change, to evolve, to improve, to reform. And therefore, when the chairman of SEBI was gracious enough to thank me for enabling this merger to take place through the parliamentary legislation, I must completely shift the credit to those who framed the great Constitution of India. Because in the late 1940s, they had anticipated what would happen in 2014-15. So while they expected both houses of parliament to pass every legislation, wisdom had dawned on them and they had provided for a provision in Article 110 for money bills. And these money bills only required a positive vote in the lower house and just a discussion and a reference back from the upper house. And therefore it carved out a great exception. And reading and rereading and reinterpreting the widths of that provision has probably now enabled us to ensure that more and more legislations will go through. So I entirely shift the credit that you have given me to those who thought of inserting this provision, because they had the wisdom of the future to anticipate that deadlocks should not block India's growth story. And that is probably why this merger now has been itself enabled. Forward Market Commission, the regulator of commodity derivatives market, is set up in 1953 under the 1952 legislation. It has seen a tremendous growth and participation after liberalization. In 2003 and the setting up of the national commodity exchanges, the Commission has been regulating these markets and putting in place various regulatory mechanisms to ensure that markets perform the efficient function of price discovery and risk management. However, in its present form, the Act did not adequately address the challenges of the new market regulatory regime required for the efficient regulation of the commodity derivative market. There were two possible approaches to address this issue: to amend the Forward Markets Contract Regulation Act on the lines of the Security Contract Regulation Act, or merge the two regulators. The second approach was preferred by the government, considering that SEBI had already matured as a security market regulator and the unification of the market and the economies of the scale. Now, this suggestion itself had also been supported by various expert opinions in the different reports which have already been mentioned. The ultimate objective of this initiative should be to reap the economies of scale and scope, not only for its own sake, but also to face the challenges thrown up by a borderless global market. The market participants and the regulators have to brace themselves to face the challenges thrown up by the global developments of ever-growing exchanges and the integration of markets. The merger would bring convergence of regulations of the security market and the commodity derivative market. Both the commodity derivatives and equity derivatives have similar economic purposes: hedging, efficient price discovery and risk management, and have a close resemblance insofar as trade practices and mechanisms are concerned. Merger will increase the economies of scope and economies of scale for the government, exchanges, financial firms and stakeholders. As there are strong commonalities between all kinds of trading, government, exchanges and financial firms would be able to harness economies of scale and economy of scope by undertaking or dealing with all organized financial trading with a robust regulatory mechanism. I am confident that SEBI is particularly prepared for this new role of regulating the commodity derivatives market. One of differences in regulating commodity derivatives vis-a-vis equity derivatives is that the underlying of commodity derivatives will not be within the regulatory purview of SEBI. As this underlying physical market is widespread, fragmented and unregulated for certain commodities, SEBI needs to have a proper mechanism to capture any aberrations in physical market that would disrupt the derivatives market. Let me conclude that markets thrive where there is confidence and integrity. In the long term, this requires transparency and good regulation. Farmers, producers, consumers need to have confidence that derivatives markets are free from manipulation and other market abuses. I am sure that SEBI would be successfully able to handle the additional responsibility entrusted to them. My best wishes to SEBI and its entire team. I would also take this opportunity of complimenting the chairman of the former chairman now of the Forward Market Commission and his entire team for all the excellent work that they have done, and I'm quite certain that SEBI, with this additional load of responsibility, would continue that work even further. Thank you.
Thank you very much, Mr. Honorable Finance Minister. I do have a question, sir, if I may put to you this morning. As you pointed out, the responsibility that now lies on SEBI's shoulders, is wide and will require additional resources. Have there been any conversations between SEBI and the Finance Ministry on maybe any kind of temporary grant? Because SEBI in itself is a self-sufficient body to that extent. So,
don't worry about the resources. Parliament has ensured that SEBI, as an independent regulator, has also got independence so far as the financial matters are concerned.
Correct.
We are not in the same position in which the US SEC is, for example. So we'll take care of these requirements.
Okay, fine. My question has been quickly answered. Mr. Finance Minister, I have one more question if I can put you this morning. You outlined the challenges of a unified regulator. If I may ask you to go into a little bit more detail, especially in the light of what's gone on with the NSCL spot exchange. Now, I'll draw that differentiation because the spot exchange was not a regulated exchange. So it was a very different situation. Even now, spot exchanges will lie possibly outside of the mandate of SEBI, but they have in some senses besmirched, commodities trading, so to speak. So what do you expect will be the challenges going forward for SEBI?
Well, I think it would be a challenge for SEBI because this is a new additional responsibility they have. This is not an area they've dealt with in the past because you had another commission dealing with it. But then SEBI has now matured over the last 25 to 27 years as an institution. And it's become an extremely fair, independent market regulator. It's got the pulse of the market. It's got the pulse of the trade in control. And since there is now a synergy between the nature of trading, I don't see SEBI taking much time before it fits into this new responsibility. Day-to-day challenges of situations as institutions mature, they get to deal with them. So I have full confidence that SEBI now, as an institution, as an independent regulator of high credibility, will fit into this job quite well.
Would you also say you are confident, sir, that an NSCL spot exchange-like event will not recur in the years to come?
A free market also means a fair market. But then you will always have aberrations, and that's why you need regulators. And therefore, if such incidents do occur, I'm sure the regulatory mechanism will be strong enough to deal with them.
Okay. So I have one final question to you, and that is that Mr. Sinha pointed out that he is, or the regulator now, is in favor of increasing or introducing new participants in the commodities derivatives market, and he also spoke of foreign portfolio investors. Now, as Mr. Das pointed out in his speech, the agri-commodities market often does knee-jerk react, sometimes, and we've seen in the past, not in the recent past, but in the past, sometimes bans, on future trading of agricultural commodities, especially when, the situation is a little sensitive. So I'm just curious to know, is the ministry in itself comfortable with the idea of bringing in foreign investors into agricultural commodities?
You see, this is one market which is evolving, and there are several experiences we have gained from the past. What you mentioned about certain controls being introduced, the government also has to be alive to the overall price situation, how it impacts the consumers. But as we go by, a balance has to be found between price stability and market development and deepening the market. Price stability and policy certainty, I think these are the twin challenges which the SEBI has to deal with. What I mean to say is that if we have to have a situation where the prices do not become unduly volatile or they suddenly, go up steeply in a manner that it affects consumers. That is one objective to which government is committed, to provide fair prices. At the same time, there has to be policy certainty also. You mentioned, sir, sometimes the controls are introduced, sometimes the controls are removed. So this is a very challenging task, and I'm sure over the years, SEBI will be able to strike a balance and give its recommendations to the government. And this is one area where government is constantly in dialogue with various stakeholders, with various experts, and also from now on with the SEBI.
That's how you're enthused by the idea of, yes, please, Mr. Sinha, of introducing foreign portfolio
I'd like to
investors?
clarify that the belief that the propensity to manipulate the market is the monopoly or the prerogative only of the foreign investors is a bad hypothesis. It can be done both by the domestic and the foreigners. So what we should look at is how are the risk management measures in place. So if you have a good system of risk management, the open interest that you take, how the prices variation from the physical market are taken into account, then whether it is a foreigner or a domestic participant doesn't really matter. And this is what we have learned in the securities market. However, as I said earlier, we are not going to do it on day one. On day one, our attempt will be to provide trust and credibility to the market. Going forward, this will happen.
Okay. So, Mr. Sinha, I have one quick question for you. Not asking for too much detail, just dates, right? When will you allow banks and foreign portfolio investors to come to the market? When will you introduce options and index futures? When will you allow for universal exchanges as you suggested? You made all these suggestions. I'm simply asking for dates and time.
I think whenever we decide that, we will be having an event maybe bigger than this. So just wait for that.
And finally, one quick question to Mr. Abhishek, if I may, sir. Any words of advice to Mr. Sinha as the charge passes hands?
SEBI being a very experienced regulator, and their staff and officers have been working very hard for last 7 months, as has been said, to understand the market, to see the differences, and they are already addressing whatever capacity constraints had been there. So I think they will do the job even much better with more powers, more experience. So we have our best wishes, but I'm sure the market will see much greater heights under SEBI regulation.
All right. Thank you very much to all 4 of you for entertaining my questions. And with that, now I'd like to invite for the final vote of thanks to take place on stage. For that, I'd like to ask the SEBI Chairman, Mr. Sinha, to present a special memento to the Honorable Finance Minister. Please, can we have the mementos on stage? And I'd also like to invite SEBI whole-time member, Mr. S. Raman, to join us on stage and present both Mr. Shaktikanta Das and Mr. Ramesh Abhishek with mementos. Thank you very much, Mr. Raman.